Hey there, welcome to the channel. Well, it looks like the NASDAQ has gone into an official bear market as measured by the weenie babies on TV. Okay, so here we are. We noticing today. So we had another kind of down day in the market. It was interesting. It started off, seemed to be was up positive, and then this really kind of got hammered to give up the whole thing. So here we are on the QQQs. We can see we're down 21% from the highs here. And what you can also see here is that we are at the lows. So we're basically, yeah, now we put in a new low, put in a new low there. So we just really, yes, and of course, obviously, we put in a new low, hence that 21% down there on that. So NASDAQ, performing kind of like dog poo on a stick at this point. Let's go look at the RK and this one as well. Now I've zoomed out here. It put in another low today. If I just quickly go to here, you can see that, yeah, I mean, it's strongly below any recent lows that were there. So if you were looking like there was a low here, kind of low here, we're, significantly just went right below that today, like a knife through hot butter. But if we go ahead and look at it off overall 66% from the highs there. So, ARC is getting the crap kicked out of it as well. So looking at our oil today, our oil did sell off minus 6% on this thing. So I was pointing out last night, like, oh, it looks like it might have found a footing, but because we had an up day on Friday, but no, it doesn't look like it. It definitely kind of sold off on that. And the implication is, I think that, it's probably got some more correction to come down. And I mean, really, the big question is this over? In other words, was this a spike that happens and then it just goes to some other thing and it doesn't continue? Or is it going to be something where, like, yeah, it keeps pulling back to one of these moving averages and then starts to ride the moving average? Don't know, but it's kind of interesting because as things are with the Ukraine situation, everything doesn't seem like anything's resolved anytime soon. Looking at the S&P, it kind of sold off today too, but the good thing here is it hasn't really put in that new low yet. So we have a recent low at 415 and a recent low down here at 410, and it's not at there yet. So it's holding up a little bit more on that. So today, looking at, let's just look at the intraday really quick on this. Yeah, it was an interesting day here because it was, started off, it was kind of like, started to kind of rally, came up, and then it just kind of got the crap kicked out of it the rest of the day. So, yeah, it just, it started to try to put in some kind of rally and just got the crap kicked out of it. So I don't know. It just kind of like a crappy day. And in a way, it kind of makes sense. I mean, I don't know. I mean, do you really want to be putting stuff on today? Tomorrow you have the PPI report coming out, okay, before the market opens. So we're going to see what that's going to be about. Has there been any positive news on CPI or PPI recently? Not really. I mean, maybe we get lucky and there'll be some kind of an inflection. I mean, it could happen. It would be a surprise. Maybe the market would do a rally. It could be. Other side of the coin is it's probably going to be consistent with what we have. And even when it meets expectations in terms of like, okay, 1% month over month change, that's pretty horrible. And then following it up, then we have on Wednesday, day after tomorrow, we have the Fed's rate announcements. And this should be the first rate rise in quite a while. So there's still a lot of uncertainty for this week. So it's kind of interesting because then if you were to look at it, then what would be the setup? Maybe the setup is after, there's less data coming out on Thursday and Friday. It's going to be a little more quiet kind of day for news events. So things like that, sometimes that will help things, kind of recover a little bit, and you'll get a little bit of an update there. Looking at gold, I just want to check this guy. Gold had this kind of huge breakout and now it's coming back down. And, this is another one. So, here's just like we're talking about with the oil. Is this going to be another case where this is going to pull back here, and then you can see how you have this, the 50-day moving average and basically the 200-day moving average here on the weekly. So you see you have these, moving averages. Is this going to come down and it's going to kind of get cradled by the moving averages and work up at a more sustainable level than this huge spike. We'll have to see about that, but it's something to watch. See, the problem is like you have this huge spike and it's like, wow, that's a huge spike. And is it a one-off thing or is it the start of a new bull move? That's the thing to watch out for. And also with the dollar, the dollar here is still working up. So we have this, very interesting, you have the dollar and you have gold kind of going up together. So it can happen. It has happened before in the past, and it seems to be happening right now. So that's it for that one. I think the only other thing I wanted to look at, let's look at the rates. Yeah, look at the rates. Look at these rates. My goodness. See, so I'm zoomed out on a weekly chart, and you can just see this return of interest rates jumping up. Wow, is that really 6.7% today? My goodness, look at that. 6.7% today? Or is that, I am in a weekly chart, but it's the start of the week, so it should be the same. So let me check this on the daily. Yeah, 6.7% rise in rates. So that's rather amazing. That's a big move in interest rates on one day. It's like, holy crap. And the implication, we have really weird stuff going on then right now. So if we look at it, what are some of the themes going on in the market right now? You have your interest rates are going up. So we have our interest rates going up. So we have the, interest rates going up. Then also, stupid cat. Hey, get out of here. Sorry, my cat's bugging me. We have interest rates going up, and this implies, of course, that bonds are going down. So people are selling bonds, are going down. Then what you have is at the same time, you have gold going up, and you also have the dollar going up. And on top of that, you have what? Even though we've had some significant down days in oil, in the big picture, you've got oil going up and you've got other commodities all going up. So it's a very interesting thing. So, and the stock market, of course, going down right now. So you have the stock market. And so, gee, it's a very interesting setup. So what's going on? So interesting. So they're selling stocks and they're selling bonds at the same time. Okay. So where this money is going, I don't know. Well, okay. So it's going maybe into commodities. We have some, generally. So we're talking like on the weekly charts right now, you started to see these trends trying to form, these breakouts, these huge breakouts where you see the dollar going up, you see oil going up, you see gold going up, general commodities going up, and interest rates going up. And so therefore it appears as if money is moving out of the stocks and it's moving out of bonds as well, and it's moving into these commodities. Now, the question will be, is this going to be a sustainable trend, or is this just, a temporary kind of fake out? It's really hard to say. I mean, when you look at this, and there's a lot of videos on this, I guess my view is like, I think Goldman Sachs or someone like upgraded their probability of a recession to something like 30%. And it's like, look, the Fed's raising rates. The probability of recession is 100%. I mean, there's no way they will get this right in this environment. There's no possible way. They have to raise rates to try to do something about the inflation. They've lost control of it. They've got the Ukraine situation, which is very volatile. You have energy prices spiking, which is giving more inflation. And even if you get like some kind of resolution to the Ukraine situation, you're back to where you started. You still have high inflation. And a matter of fact, even if it starts coming off and resolving with the oil because of the Ukraine situation, even at that point, you still you've got another 2, 3, 4 months of like high inflation coming just from the fact that the oil spiked that much, and that caused everything that oil goes into, which is everything, to go up. So, I mean, it just seems like the odds are like 100% we're going into recession. There's no doubt about it. And here's the thing. So if you remember on not the last one. There was one of the recessions, basically in the financial crisis. It was very interesting. They have this organization, and Burr or something like that. And what they do is they kind of like officially declare recessions. And so what they do is they look back, they're looking for 2 consecutive quarters of declining GDP. Now that's just the hard statistics, but they also look at soft statistics, and they'll look at these other things like what's happening with the stock market. They'll look at other economic activity and all this stuff. And then they'll declare like, and they'll say like, oh, we were in a recession. And it was very interesting because sometimes they might be 3 months, 6 months later decide that like it admit that we were in a recession. So you're not, it will be, they are a lagging indicator. The official declaration of recession is lagging indicator. The official predictor of a recession is the stock market, right? The stock market coming down first is going to be the precursor to a reduction in economic activity. And that's what you're seeing here. So like when you're at the SPY, this thing's only coming off a little bit. I mean, this is not like, it hasn't come off a lot. It seems to me it could come off significantly more. If I go here and I annotate this sucker and I say to myself, how much has the SPY come off? It's come off about 13%. Well, 13% is a run-of-the-mill pullback. It's nothing. So from that perspective, it still would have more time. Now, on the other end of this scope, you have your high-tech RK speculative. Well, this thing has come off, like we were saying, 66%. So it's a disaster and a train wreck. And it's very interesting. So here's the thing. At some point, these guys are all going to come around and they're going to turn the corner. Some point we will have the SPY will come down as much as it is, base out, and then start moving up again. So this would be like your SPY. The question is going to be, is stuff like ARK going to follow it? Or, more likely is ARK going to lead it? Are they going to, ARK is like already here. It was coming up, et cetera. And it's already come down way down here and it's still coming down. Now, the question is it going to find its base and there and start coming up? And is it going to lead it since it's already kind of way ahead and it's gotten the crap kicked out of it? It could be. Now, the only risk in here, here's the thing. The one thing to keep in mind is that this is now, if this sort of pans out, this could be an entire market cycle. And that means that, as I had shown in that other video, some of the leaders of today will not be the leaders of tomorrow. And when you're talking about ARK and you're talking about that stuff, some of those companies may not exist. I put out a video today on my on some basic, simple, fundamental review of Tesla, and actually very impressive. It's like, okay, they're definitely for real, but you got a lot of other companies in here. Some of these are not going to make it, and I especially think that some of the car sales companies, whether they be like Shift, Carvana, all that stuff, I think they're treading water. I think that it's a low margin business. So you try to improve the customer experience. You don't have enough margin to improve it, is what may in fact be the case. So that's the only thing to keep in mind. Some of these companies aren't going to be around. Now, some of them will be around and they will just linger for like decades and go nowhere. And that's just as good as not being around. So that's the only thing that you want to watch out. If you're looking at picking bottoms and you're looking at picking winners, and you should be looking as well. Hey, if we're going into a bear market and we're kind of just officially in a bear market due to the crappy, 20% is a bear market. No, whatever. I mean, yes, we're in a bear market now. With the Q, it's made the corner, it's pulled down, it's pulling the moving averages down, and so this thing has gone into decline for sure. SPY, I mean, it looks like it's going as well. It's kind of getting below all the important moving averages, so it's entering, but it's the early part of that bear market that it's in. So now, looking for when we come out of this, that's the thing to kind of keep in mind. If we're looking at what's going to be the winners, hey, all other things, not in financial advice, Tesla, they're around, or they look like they could be a winner. They could weather this thing, but like Rivian, some of these other companies, not if they haven't gotten to a point, it's like the world isn't fair, right? So it's like, hey, you're trying to build your business and you're trying to get it up, and you get clipped by a recession, you get clipped by high energy prices in war, before you were able to get to a size and a scale where you could like weather the storm. This kind of thing happens all the time, and it's just kind of how it goes sometimes. So that's the only thing that you really want to watch out for when you go in and you're kind of watching this for the other side. And so what's going to happen is, what I would think that's going to happen, and this usually happen at some point. This thing is going down and down. At some point we start getting bases, and I prefer to look at the weekly charts, the big charts, because the problem is if you're on a daily or intraday, you're going to have lots of squiggly and squiggling there, and it'll fake you out, and you'll be like me, Kevin, and you'll be like you'll be like just constantly flip-flopping. And it's really dangerous to just, we kind of know what the Fed's going to do something, and they're going to have to go ahead and do some rate rising. And as long as that's the case, and as long as the high energy prices, et cetera, we're set up against everything. And now this is a very interesting setup here. See, the thing is that this would be a bear market, but it's not. I mean, it was such a quick correction, even though the percentages are huge percentages down here. It didn't really interrupt the trend because it was so short in the time frame. It didn't last enough time to really create a new trend. It just imploded suddenly, and then they printed a bunch of money, and it just recovered and returned to a trend. Now, what's interesting about it is it didn't just return to a trend. It came out of there at a higher slope than it went in. So it's a very interesting thing. Think about this setup. You're back here, and this market is going, it's on some kind of a trend, and you're like, okay, so you're up here, you're on some trend, and then this whole thing happens, and then what's the trend coming out? Look at your new trend is like this. It's like this huge, like you go from a 45 degree to the right to a 70 degree or 60 degree straight up. It's totally unsustainable. It's not what you want. And that's just the response to all the money and stimulus and all the stuff that they put into there. And so my point is that when I talk about the leaders of this run may not be the leaders of the next cycle, this is one cycle. This whole thing is one cycle. This little tiny thing here, just the way it worked out, this was not a cycle. This was not, oh, that cycle ended, a new one. No, they short-circuited that correction. And I suspect we're going to have to go through a full cycle of coming down to somewhere, basing out, and then going up to the next cycle. That's just kind of where I think we're at. All right, so that's it for this one. Look out below. Talk to you later. Bye.